Hello everyone and welcome to the strategy of the week titled Picking Derby Stocks Using the Midas Touch. Once again, my name is Jerry D'Ambrosio and it's my pleasure to present tonight's strategy this evening. If you're looking for a fast and simple technique for selecting stocks and managing your portfolio, you came to the right place. Tonight, I'm going to show you how to drastically reduce the amount of time it may be taking some of you with the stock selection process. The Midas Touch technique has been a huge hit with our clients, and Dr. DeLito has even written about his success in the views on several occasions. The Midas Touch graph layout is extremely easy to read and has everything you need to not only select entry points, but it also helps with determining when to exit a position as well. Let's move right into the software and begin. I'm going to move us from the home page into the VectorVest views, and here we're looking at the views as of the close of last night, and I'm going to scroll us right down to today's Derby winners and today's 5-day Derby winners. Now today's Derby winners are the 5 strategies that perform the best today as of March 6th. The list at the bottom are the searches in the Derby, and right now we have a little bit over 180 searches. These are the searches that have performed the best over the past 5 days. At the top we have Bear Market Burner up almost 20% in the last 5 days. Thornton's Thunder up 14. All 5 searches here are up double digits over the last 5 trading days. And we're always asked the question, what are your best searches? Which searches are working the best right now? Well, this section of the views answers those questions. These 5 searches have been the best 5 in the current market condition over the last 5 days. So if you're ever wondering which searches do you pick, look no further than the views every day. So tonight, I'm going to apply the Midas Touch technique, which we've demonstrated numerous times over the last several months, to the stocks from these searches. So I'm going to start with Bear Market Burner. I'm going to come up to Unisearch, open up the Bear Market Beaters folder, and select Bear Market Burner. I'll double click on that. We're displaying the top 20 stocks. And what I'm going to do from here, I'm going to click on this little button here, and we're going to graph all 20 of those stocks. I already have my layout set to the Midas Touch, and just to review here, again, we've talked about this technique a number of times recently. The 10-day moving average on the stop price is in red, the 65-day moving average on the stop price is in green, and the subgraph at the bottom is a 40-day moving average on RT. I'm going to change our graph though from a 1-year graph to a 3-month, and right away we see that this one fails. In order to pass the test, both moving averages at the top have to be hitting 3-month highs as well as the 40-day moving average on RT. Clearly the 40-day MA on RT is not hitting a 3-month high. We immediately move on to the next stock. That's how easy this is. I'll move on to the next one. We can see Freddie Mac doesn't pass as well. Neither does Fannie Mae. Now here's our first potential candidate, MEET. All 3 lines are hitting 3-month highs. I'll write this symbol down and I'll move on to the next one. So does VIMC. I'll write that down as well. This one clearly doesn't pass. ROSG does. Now this one's close. I'm going to come up here and change our cursor type to a crosshair cursor. You can see that just recently the 40-day MA did tick higher, but it's still off of a recent high here of 1.32. Now this is a good point to make. Just because it doesn't pass the test today doesn't mean in a few days from now it might. Good sign here that the 40-day MA just ticked higher. If in the next few days the price of the stock continues to move higher, this indicator will hit a 3-month high, and this could be a potential candidate in a few days. So you may just want to put this in a watch list to keep an eye on. I'll move to the next one. BLDP does pass the test. ONTY does as well. So does Born. MNI. This one's close. We can see 40-day MA is curling over and starting to trend downward, so this one fails. IFON passes. So does BSPM, and NOR does as well, and the final one, RSYS, fails. So it took a few minutes there to go through the top 20 charts and cherry pick the ones that meet the Midas Touch layout. So like I said earlier, it's easier than ever to pick entry points and to pick potential candidates. So I'll close this graph, and what I want to do from here is I want to take those stocks. I want to take the stocks that pass the test, and I want to put them in a watch list. And all I'm doing here, folks, is I'm holding my control key on my keyboard down and selecting all the stocks that pass the test. Should have 10 here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Great. So 10 stocks out of the 20 that we saw pass the test. I'll right click in that area. We'll select Add to Watch List. And I'm going to go ahead and create another folder. I'm going to click on this little drop down arrow here, select New Group, and just title this folder the Midas Touch. Here are the 10 symbols in our items to add list. We'll go ahead and create a new watch list, and I'll just call these Top Derby Stocks. All right, go ahead and click on OK. And you'd go about that process for all the searches in the 5-day Derby winner list. It should only take you a few minutes to do that. So I hope everybody now understands that it's very easy to cherry pick stocks using the Midas Touch. The question now becomes, after you buy these stocks, when do you get out? And that's the age-old question, right? How do I protect profits, and when do I exit these positions? Let me go into a market timing graph first. And I'm going to change us from a 1-year graph to a 6-month graph. And I'm going to take off the buy to sell ratio for now, and I'm just going to put the confirm calls on. So what I did as part of my research here is I took these 3 recent confirmed up situation calls, and I applied the same technique at these points in time. So for example, September 11th of 2013, I went into the VectorVest views. I identified what the top 5 Derby winners were. We could see we have Lowenthal's Express, Wow Watchlist winners, and so on. I went into Unisearch. Double-clicked on Lowenthal's Express, and I graphed the top 20 stocks and ran through the same process that I just showed you earlier. I put all the stocks that passed the Midas Touch test into a watch list, and I did that for all 5 searches here. So now if I come up to Viewers and I open up the 00 Strategy of the Week folder, you could see I have 3 watch lists in this folder. Top Derby Stocks 9/11/2013. Now, there are 5 searches in the views, right? So theoretically you could have 100 stocks. Now there was some overlap from those searches. There were some stocks that appeared multiple times. So as you can see, there are 28 items found. So 28 stocks met the Midas Touch layout. So let me do this. Let me go back to September 11th. And here's how the stocks appeared on September 11th and were sorted by VST. Let me graph all the stocks here. I'm going to change our end date, and I want to make the hard right edge September 11th. And we're going to go 3 months prior to September 11th. So that was June 11th. I'll go ahead and click on OK. You'll notice right away VIPS passed the test as of September 11th. And here is the hard right edge, which is September 11th. I'll just go through a few of these, and you'll notice every single one of these stocks passes the test. Okay, so if I close this graph down and I come back up to the top, now again, we're sorted by VST, so I'm going to come up to the top here and I'm going to quick test all the stocks. Now from September 11th to current, you have 26 winners and 2 losers. On average, up 52%. Now the market, the S&P 500, only went up 11%. And you have a couple of losers here right at the top, XIN and TEO. Now, you probably wouldn't hold all of these stocks all the way to current, so I'm going to be true to our methodology, and I'm going to take the end date to the subsequent confirmed down call on December 11th, and I'm going to rerun the test. You can see 20 winners, 8 losers. On average, up about 18%. Again, the market went up 5% over that time period. And if I scroll down, you can see we have a lot of winners across the board. However, we do have some losers in the bunch. We have NQ went down almost 38%, QIHU down 12, XIN down about 13, TEO down about 10. I'm going to highlight all of the losers here and talk about a few techniques that you might implement to turn big losers into smaller losers. Not every trade is going to be a winning trade. You're going to have some losers, but your success is determined by how you manage risk and how you manage your losing trades. So I'll right click here, I'll select View Stock Graph, and here we're looking at NQ from September 11th to December 11th. So we entered in over here at a confirmed up signal. Price of the stock did continue to rise, did pull back a little bit, and it started to converge towards its 10-day moving average on the stop. That's, I guess you can call it tip number one. Anytime you see the price of the stock converging towards its 10-day moving average on the stop, that, along with the breakdown in the 40-day moving average on RT, those two situations there should throw up a red flag. Momentum is deteriorating, and that's evident here with the 40-day moving average on RT falling. Price is starting to converge towards its 10-day moving average. It did retrace from it, started to rise again, hit a high price of $25.90. Remember, we got in at about $18, hit a high price of $25.90, and then started to fall consistently from there. Now, you see this big red candle, you may say, man, there's nothing I could have done there. Well, this wasn't a gap down. The stock didn't gap down. It opened at $23 and hit a low of $8.46. So I'm sure at some point during the day on the 24th of October, you're exiting the position. But you did see signs of this breakdown much earlier with the 40-day moving average on RT steadily falling. So instead of a 37% loser, if you would have held it all the way to the confirmed down, you got out some point in here. So I hope everybody sees that. If I come down to the bottom, click on recommendation, there's your next tip. If the stock ever gets a sell rating from VectorVest, you'd want to exit the position as well. So with the price of the stock converging towards its 10-day moving average on the stop price, the 40-day moving average on RT breaking down, the stock finally closing below or crossing below its 10-day moving average on the stop, and the recommendation turning from a buy to a sell, there aren't many more signals that we can give you here to let you know that you shouldn't be in the position anymore. Okay, let me move to the next one. Here we have QIHU, and we bought it back here on September 11th. Price of the stock moved sideways for a little bit, actually began a downtrend of hitting lower highs. 40-day moving average on RT definitely started to break down. It's very clear here. And very easily, we could have turned this 14% loser into a much smaller loss by being able to identify some of these signs. Now, this is the big one. Anytime I see the price of a stock moving virtually sideways, we can call this channeling, right? But the 40-day moving average on RT breaking down like this, that's throwing up a flag for me saying, I got to watch this position much, much more closely. And as this downtrend strengthens, I'm looking to close the position. Here's XIN. Now this is a different story here. Price of the stock continued to rise. 40-day moving average on RT also continued to rise. We bought in at right about $6. It hit a high here of $7.44. So it's our job from this point on to keep as much of that as we possibly can. But what are we seeing here? We're seeing the price of the stock converging towards its 10-day moving average. RT is also starting to break down here. It eventually gets a sell rating on the 14th of November. RT is actually starting to exponentially fall lower and lower. Here's TEO. Another good example here. Price of the stock began to fall after we bought it. 40-day moving average on RT began to break down. So this could have been another opportunity to either cut your losses or take quicker gains. You know, we're not trying to hit home runs here with every trade. And with every trade, you want to try to come away with a profit. So when things don't look picture perfect, and they certainly don't here, you have a 40-day moving average here breaking down with the price of the stock on this wild roller coaster of a ride, you want to walk away from something like this with a gain. Now here was actually another loser, but as you can see, there were plenty of opportunities here to take profits before this turned from a winner into a loser. Now it didn't get a sell rating until December 6th, but as you can see, there were plenty of opportunities before that to exit out of the position, and you would have exited this trade with a profit. Stock was about $11 on the 11th. It hit a high here of about $14, started to decline, the momentum started to break down, so somewhere right around here you may be thinking about exiting the position. And we'll look at one more. Now there's nothing much you could have done here. We were entered in here on September 11th. Not too long after that, RT started to break down. But again, if you start to see this, there's no reason to continue to hold on to the position. This stock is clearly in a downtrend. Our indicator at the bottom is steadily falling. You don't have to wait for the stock to get a sell rating before you sell it. If you see something like this, now if I just pull this back a little bit, entirely different picture here, right? Now the hard right edge now is September 11th. This is what we saw at the confirmed up signal. All evidence pointed to a good potential buy candidate, but again, as I move it over, momentum started to break down, stock began its downtrend. You're not going to be right on every trade. It's really important that you manage risk and not turn small losers, potential small losers, into big losers. I also ran through the same technique on the December 26th confirmed up and the February 14th confirmed up. Now let me show you the December 26th confirmed up real quick. I only found 11 stocks, and if I take this date to December 26th and quick test them all, now up into current, up 0.79%, but again, being true to our methodology, I want to take the end date to the subsequent confirmed down that was on January 31st, and I'm not afraid here to show you a losing run. It wasn't a very long confirmed up. Reality of the situation is you're not going to win every single time, but you can see that we have some big losers here, and I'm going to graph those losers to see if we couldn't have cut them loose a little earlier. So December 26th to January 31st, we entered in over here at the confirmed up signal. Did we have a chance to make money before this turned into a big loser? I think we did. We got in right about $3.50. It hit a high of $3.98, almost $4. Started to converge towards its 10-day moving average. RT started to break down over here, so we could have turned this big loser into a smaller loser. How about this one? We got in here on December 26th. Not much we could have done here with this big gap down, but we did see RT starting to break down right about here, close to the end of January on the 23rd. We could have cut this loose a little earlier as well. Definitely here with LTS, right? RT started to break down right here in the middle of January, continued its downtrend. No reason why we needed to hold this stock all the way to the confirmed down. So those were the three big losers in the bunch, and by following those tips, you can see it's going to help you tremendously managing your risk and not dig yourself deeper and deeper into a hole. You can see that there's one more watch list here on 2/14. That was the most recent confirmed up. And if I quick test all those stocks as well, up about 11%, with the overall market up just about 2%. And the great thing about putting these stocks in a watch list is you can sort this list however you'd like. We're sorted by VST right now, and we're looking at 25 stocks. I'm going to close this section down. You can also sort by comfort index. The Midas Touch layout identifies, the longer term trends of those indicators, the stop price and the RT. Well, CI is very similar. It looks at long-term price history, and it identifies a stock's ability to resist some of those lengthy downturns in price. It's on a 0 to 2 scale. Above 1 is good, below 1 is bad. So we can see that we're sorted here by CI. And if I just quick test, let's say the top 10 from February 14th to current, up about 8.5%. The overall market up just about 2%. So just to review quickly, The Midas Touch offers an extremely easy way to identify stocks to purchase. What I've gone through here tonight is a few tips in helping you determine when to exit a position. Once the price of the stock starts to converge towards its 10-day moving average on the stop price and the 40-day moving average on RT starts to break down, that should right there throw up a red flag letting you know that you may want to exit the position, and your last line in the sand is when the recommendation of the stock turns to a sell. And also you want to be careful when the price of the stock closes below that 10-day moving average on the stop price. And we found that those are some excellent telltale signs that momentum is breaking down and that you may want to exit the position. So I hope everybody enjoyed tonight's presentation. If you do have questions, we will be holding a live Q&A webcast on Monday at 2 p.m. You can register for that webcast right here from the website that you see, www.vectorvest.com/events. This concludes tonight's presentation. Have a great weekend, everyone.